Hello and welcome to Hadeda Insights. We're here to explore the systems, strategies, and thinking behind stronger advice businesses. Today, we're diving into one of the most complex and often underestimated areas of financial planning, tax. They say in life two things are certain, death and taxes. Well, I think there's another one that's certain. The knowledge and application of the web of tax provisions is anything but certain. Advisors simply don't know what they don't know, and the consequences can be serious. So to demystify things, I'm joined by Emile, founder of Gravitas Tax, and Porcha, also a consultant at Gravitas Tax. Gravitas Tax works closely with advisors and businesses and high net worth individuals to navigate tax strategically and not just compliantly. So in this conversation, we're going to unpack what advisors should understand about tax today, where the risks often hide, and how better tax thinking can materially improve client outcomes. Okay, let's get into it. Firstly, welcome to both of you.
Thank you, Matthew. Thank you for having us.
Thank you, Matthew. Morning to everyone.
Let's just start off with advisors who maybe have got no idea, who Gravitas or what Gravitas Tax is and what they do. How do you describe what you do and who do you typically work with?
Once again, thank you for hosting us today. We're very excited to see if we can add some value. So I think we offer a very niche service first of all, and we do kind of wear more than one hat. Myself and Portia, we are both registered financial planners. So that's kind of where the background of Gravitas Tax started. We specialize in retirement planning in our own personal books. And when just having those discussions with clients, the age-old question, coming to retirement, came up to, have you ever previously taken funds from your retirement vehicles? And with the changing landscape, with two-pot coming in, that's a very difficult. It sounds like a simple question to a client, but it's not the easiest question if you don't work with it every day. So clients end up, they don't remember that they've previously taken funds over a 30-year career. They don't understand that a retrenchment also counts as a withdrawal. So there's various different factors that comes into play. And getting that information accurately becomes so vital in the retirement process. So what we do at Gravitas Tax, we provide a tax directive simulation to other financial advisors to have that informed discussion with clients. And it just allows you to have that information accurately. It doesn't matter what the client tells you, it doesn't tell you. If you run the tax directive simulation, it will show us, it will preempt what the tax is going to be once we get to that actual directive stage. And the massive problem that we solve is once we get to that actual directive stage with clients and the tax is deducted that was unaccounted for, there's no kind of going back. So the client sits in a difficult position, the advisor sits in a difficult position, the whole plan that we came up sits in a difficult position. You kind of have to backtrack, where you can simply solve all of that just by doing a tax directive simulation and having that informed discussion right up front with the client compared to getting the information on the back foot at the end and having to kind of backtrack from there.
I think we're going to get into a little bit more about what you've just said. So you've described sort of the solution and a little bit of the problem, but what made you, Emile, realize that there was an issue? When was that moment where you thought, okay, there's actually a gap here and a disconnect between advisors and getting clients the right tax advice?
It 100% was a practical example in my own business. So I had the discussion with the client and the client said that they haven't previously taken withdrawals, and it ended up, I think it was about 100,000 Rand unaccounted for tax that was deducted from the lump sum once we got to retirement stage. That threw me out a bit because I was planning for, and I jotted it down in my normal record of advice stating that the advice was provided on the information that was provided by the client. I safeguarded myself in that matter, but it didn't solve the problem. The tax was still deducted. The client was still in a compromised position. And the plan kind of had to we had to backtrack from there. That kind of got us thinking, and we started to explore tax directive simulations a bit more, which only came into effect in 2019. And we found the solutions in the market was a bit tedious. It was all paper-based. It was all going through call centers. And us being forward-thinking, we tried to kind of optimize that whole process. And then Gravitas Tax came into existence. I'm sure we'll delve a bit more into that.
Portia, something Emile just touched on. Many advisors see tax as something you deal with after the fact, but at that stage, it's a little bit too late. Do you see tax differently as a planning tool rather than just an after-the-fact compliance exercise?
Yes, 100%, Matthew. So in the past, we could go back to SARS and say, I didn't know, please can we change? But they really have clamped down on that, and they're no longer allowing us to go back and undo a directive. So it's even more important to have your facts upfront so that your client can make an educated decision. And very often, I remember Emile always said that he had a client who said he had a golden handshake, but he wasn't retrenched. So when you ask clients, they often don't know what they don't know. And it's very difficult to explain that. But when you interface with SARS and you can show them those facts up front, it does make the whole process with the client much easier. And it takes away any gray area, any mistakes, and breaking down of relationships afterwards, because we want to walk the path with our clients. So it is imperative to get the information up front, I believe. I don't think you can do financial planning well without having a simulation at hand, I must say.
Obviously, that's what you guys would recommend, but I think obviously in the market, not everyone views it that way, and that might lead to a very nasty surprise and an uncomfortable conversation with the client at the end of the day. So I said earlier that advisors only know what they know. And what do you, in your experience, Emile, find the most common tax blind spots for otherwise well-structured financial plans are?
Yeah, 100%. I don't want to sound like we're kind of beating the same old drum, but I mean, it's very difficult to plan for something with a client that the client is blissfully unaware of. It's very difficult to plan for something if you trying to ask the right questions, but the client might not understand that they're not providing the correct information. So the plan can be fantastically structured. If there's a blind spot and something that's unaccounted for, that will derail the best financial plan. And if we look at the financial planning industry as a whole, there seems to be a massive focus on fees, and clients are very fee sensitive, as they should be. But the tax aspect kind of seems to be neglected a lot of time. Clients would move funds for 10 or 20 basis points, but leave 100,000, 200,000 of tax unaccounted for, but not doing that proper financial plan in terms of assimilation and the various other benefits that we add as Gravitas Tax.
We know that the tax landscape is an ever-changing one, and to stay up to date, you really almost need to become a specialist. And if you are a financial planner, it might be very difficult to keep up to date with that ever-changing landscape. So in your experience, what does a good collaboration between a financial advisor and a tax specialist look like?
So it's fundamentally important to have a relationship in your financial planning business with a tax consultant. And as financial advisors, we a lot of times play in a fine line in terms of what is tax, because not all financial advisors are tax consultants themselves, but all of the advice that we provide on retirement planning has tax aspects combined into that. So it's very important to know what you're able to advise on as a financial advisor, and once again to have all of the I's ticked. So for me, having that existing relationship with a tax planner and being able to have an informed discussion with the client, with the tax planner, because not everything that we see on the tax directive simulation will give you the exact information. If I use a practical example, we have something called an IT88, which means the client owes funds to SARS. That is something we prompt on a tax directive simulation to also make the client aware that there is outstanding funds owed to SARS. We don't reflect that amount. It can be 100 Rand, it can be 100,000 Rand. Something that we'll then advise the client to check with either our accountant or their accountant before we move forward with the process, because that would automatically be deducted from the lump sum that the client takes. So having an existing relationship with a tax consultant, because they specialize in different things that we specialize in as financial advisors and at Gravitas Tax as well.
So in your experience, can you describe a really good collaboration that you've had before, and sort of at what stage, all the role players got involved so that there was a great outcome for a client?
Yeah, so I think we've had fantastic relationships with our accountant partners for many, many years. It's something that we, excuse me, established right up front. We just felt it's a value add that we can offer, referring clients to a trusted accountant, because you don't want to set up the perfect financial plan and then leave holes in the accounting side of the client's portfolio. Having a relationship that you trust and the advice from the accountant that you trust as well. As mentioned, you don't want something small that's missed to derail the whole plan.
Portia, at the risk of repeating what we've already said, what is the cost of getting tax advice too late?
That's a very tough question, but it's Yeah, we can't put that into a monetary value. It's that fee that you pay to Gravitas Tax is the best money you'll ever spend in your life, just by avoiding any of, like you say, the breakage with the client, the relationship, everything that can go wrong with not having the knowledge on hand, as we've said. But there's just something else I wanted to just mention, which I almost think is sometimes overlooked with tax simulations, because we do look at the pitfalls and we look at the outstanding IT-88s and we do look at previously withdrawn amounts. But we don't often, or advisors don't look at the benefit of, is the excess contributions or disallowed contributions. And the only way to know that is by having a simulation. And that also changes the entire advice giving process, because your tax picture looks different if you take those contributions into account. And if you don't have a simulation, you actually can't advise on it, which gives you as the advisor, again, a step ahead of advisors not using simulations. So I really do think it's so much value. Yeah. It doesn't make sense to not have it. I've said it again, but I really am a Gravitas converted, and I work for Emile and Gravitas, but it's amazing. It really is.
I think, the importance of this discussion, there's a lot of technical talk that might go over people's heads, and that's good, because it's just knowing that you don't know everything, and you actually should be aware that there are these risks lying in your advice, which could come back to bite at some point. And it's just good to have that knowledge and peace of mind that you've got the right people that you're talking to that can cover those in advance, so that it's not too late and you don't have to have an uncomfortable chat to your client on the line. Emile, just in practice, SARS enforcement and scrutiny has obviously increased, as it always does year on year. What should advisors be more aware of right now when it comes to tax risk?
Yeah, so I think SARS has definitely stepped up their game in terms of monitoring and actually getting the funds in that they need to get in. So I think for advisors, just setting up the proper financial plan. I think there's various strategies that we can go into as a financial advisor, setting up trusts, companies, that sort of thing. So I think it's just doing that continuous research in terms of what the tax landscape looks like. We've had a massive change recently with the two-pot system that came in towards the end of. So that was a massive restructure of the whole tax landscape. So we're hoping that there's not going to be another one in the near future. But as always for advisors, I think just staying up to date with what is relevant, what changes came into effect. And I think that's something that we try to focus on with Gravitas Tax as well. We really try to simplify that tax landscape in a very simple. I think we've got about five inputs in requesting a simulation. So it's a very complex space, but we boil it down to the very kind of bare basics that gives the advisor that accurate information, and you can actually. But that being said, you need to understand the tax landscape very well to be able to use Gravitas Tax.
Are there specific areas that you're seeing SARS focus more attention on? Obviously, you mentioned trust, etc. That's always an ongoing area of concern to wealth planning, and it's quite an essential feature of wealth planning, the use of trust. Are there any other, or you can speak more about that, any areas you're seeing there's a specific focus on at the moment?
Yeah, taking it back once again to the kind of retirement reform discussion, I think that was the biggest one, and the biggest one that we've seen probably ever with regards to, it was in the pipeline for such a long time. It was delayed quite a few times, which we obviously need to monitor very closely in terms of our system. So we had to make massive changes on our side to accommodate for the various different pots, vested pots, or we're not going to go into too much detail with all the different technicalities. But yeah, first thing that comes to mind, because it was so applicable to us, and it's still so applicable to us on a day-to-day basis, is the retirement reform. And what we've seen is obviously client accessing funds a lot from these, because clients now got more access to available capital. And what we've seen to date is client mostly accessing these savings pockets for, not really for emergencies, more not as they should, for unrelated retirement planning stuff, or maybe to settle debt. But we definitely see it playing a massive role in the retirement planning process going forward. Accessing the different pots at the correct stage, what the tax is going to be applicable on the various different pots, which is something we obviously do at Gravitas Tax to do the different types of simulations. So you can do a nice comparison for the client to see which pot does it actually make sense to access the funds from. And not just do the easiest kind of route, the quickest withdrawal available to a client, because that has consequences in the short term and in the longer term as well.
Emile, just following from that, if you could give financial advisors a short checklist, when should they absolutely bring a tax specialist into their conversation? And obviously the answer should be always, just to make sure that, where there's a blind spot, you don't know it's there. But, just kind of any practical advice on when they should really know they need to bring a specialist on board.
Yeah, so as I mentioned earlier, a specialist on hand is vitally important. I think it's all about utilizing the different tools in your business as a financial advisor. That's why I mentioned upfront, we kind of wear different hats in our businesses. We personal financial advisors, and we run Gravitas Tax, which is a fintech software for financial advisors to use. And then the tax specialist sits completely outside of that umbrella. A lot of people kind of get a bit confused with the name Gravitas Tax. I think we are accountants ourselves. We are simply a tech solution that provides financial advisors advice very, very specific to withdrawals from retirement funds. So it's all about utilizing, if I wear my financial advisor hat, all about utilizing the different tools in your business. If I put back on my Gravitas Tax hat, as Portia mentioned earlier, we don't believe you can do a sufficient retirement plan without doing a tax directive simulation, not specifically a Gravitas Tax simulation. I would say we're the most efficient and easiest tool to use for financial advisors. And that's where our initial research also started. That the other tools or providers, it's very paper-based applications. We provide everything online. So getting back to the question, it's just about utilizing all of your different tools, and I think Gravitas Tax is a necessary tool in that aspect.
So how do you see the role of tax evolving in financial planning over the next 5 years?
That's a tricky one. Thank you, Emile. Tax is, like you said, it's there forever. It's not going to go away. From an evolving point of view, with Gravitas Tax in line, the view of Gravitas Tax, I think we've got most of the bases covered of whatever SARS will throw our way as advisors to have all the tools on hand. So I don't see many concerns there. I don't have much knowledge as to SARS and what their future insights hold. Emile, do you have anything that you could add there that I'm not thinking of?
Yeah, 100%, Portia. Sorry, I put you on the spot there, but I think you did well. I think it's, as a company from Gravitas Tax side, it's all about being nimble with the fast moving pace of AI and all of that. And we've done extensive research on that as well. And I think we've incorporated that in our personal businesses, not as massively on the Gravitas Tax side, but I think, as with everything today, it's all about being nimble, being able to move quickly if you should, and having that willingness to kind of explore the different options as all financial advisors. And I think that perfectly ties into the Hadeda platform, where it offers a solution where all of the tech is pulled into one platform. As financial advisors, we've got a million different tools available to us, and it sometimes becomes a bit overwhelming. It's nice to have a one-stop shop, if you can call it that, to see what tools is there for your specific need. Because people listening to this conversation might not have a specific need they only specialize in medical aid planning. And Gravitas Tax would be completely irrelevant to their business, but there would be something on the platform that they can utilize. So I think that's what we like about the platform, and why we like Gravitas sitting on the platform as well. It just creates that awareness.
Emile, now's an opportunity to be completely biased. So what would you advise advisors who want to elevate their practice by integrating tax thinking, but they don't know where to start? Where should they start?
Yeah, for me, without being biased, I think everything with regards to financial planning is about putting the client first. And I think that's a principle we focus on in our business. And if you start with that kind of foundation and that core principle, you automatically start exploring tax tools, compliance tools, F&A tools, CRMs. So I think you automatically start researching and thinking a bit more in that direction. And I think if you've got that at the forefront of your decision making, the rest will follow.
Okay, sorry, Portia, this one's also for Emile, only because he's got a little bit of experience with Hadeda's Tech Finder. Why do you think all advisors should use Hadeda's Tech Finder?
Yeah, I'll add a couple of things, but I think Portia almost uses it more than me. But yeah, as I mentioned, it's just a fantastic one-stop shop to find a tool. I think there's at least a tool for everyone that they can in some shape or form incorporate in their business. But Portia, yeah, did you want to add something to that?
Yes, no, I completely agree. And there are so many tools, and it can be rather overwhelming when you go onto the internet and start searching blindly for tools. Where when I go onto Hadeda and I see what's there, and there's summaries and there's breakdowns and potential little videos, it does really make it a lot easier to find the perfect company to join forces with or enhance your financial planning practice. So yeah, it's a brilliant tool to use. Yes.
Thank you both. This has been really insightful conversation. And even if it's just to bring an awareness that there are tax effects with regards to giving advice which require pausing and attention. So thank you, Emile. Thank you, Portia from Gravitas Tax, for unpacking how tax, when treated strategically, can significantly improve advice outcomes, not just compliance. For financial advisors watching, this is a reminder that stronger advice isn't about more tools, it's about integrating better between the right specialists. If you found this useful, explore Hadeda Insights and take a look at how Hadeda helps advisors connect the dots across their advice ecosystem. Thanks for watching. We'll see you in the next episode.